Well, hello and welcome to this week's update here on YouTube. So let's firstly have a look at what's going on in the market. I spoke last week and said this is a significant level where the market is right now. This upward trend line here, I said we could very easily bounce off this or potentially break it. We don't know. It's a strong level of support though. And it's also our low of our opening range, which is right there. So there was three significant points there that showed that we could get a bounce from there, but either way, it was certainly a significant level. Well, we certainly did move up from there. Now, the other thing that I did mention is the US dollar, that it's just been up, up and away, as you can see from this trend line. But we had 3 down days. So what happened when the US dollar went down? Well, the markets went up, obviously. And like I mentioned before, we got Bitcoin moving up as well because they are inversely related. About a 10% move to the upside. So everything I spoke about last week actually played out exactly as I anticipated, which is kind of nice. Now, this week coming up, though, we can see right now that we have not a lot going on Monday, but on Tuesday, we've got the CPI numbers coming out. Consumer Price Index, inflation, in other words. Not really the CPI, it's the CPI, because the numbers are so heavily manipulated. But anyway, they're coming out on Tuesday, about an hour before the market opens. So both CPI and core CPI, this is something that will move the markets. Okay, so how will it move the market, Sean? Well, if we get less inflation or maybe lower CPI or moves up less than what everyone expected, it's not increasing, let's put it that way. My guess is the Federal Reserve will raise rates by 0.5% later on this month in September. If the CPI number is not showing signs of falling, it's actually higher perhaps, then in my opinion the Federal Reserve will raise rates by 0.75%, right? That's my best educated guess. So right in front of a major economic news that everyone is focused on, inflation. I mean, right now we're going through a crisis in the cost of living. There's no doubt about that. So this is a focal point for the Federal Reserve, which is meeting this month, and it's a focal point of the market, right? So we've got to be fixated on this because this could certainly send the market either way, depending on what the number is. Okay, lower CPI number, market's going to go up because they're going to raise rates by less of an amount, probably 0.5%. If we see CPI move up, they're going to raise rates more aggressively, say 0.75%, the market will move down. So we've got to wait for that to come out. The combined put-call ratio right now, the 10-day moving average, is 1.08. Now, this is very bearish, excessive call buying. This is a bearish sign. The trend, most accurate overbought, oversold reading on the planet is at 0.45, right here, 0.45. That too is very bearish. If we look here at the SPX put call ratio, 1.36, that too is very bearish. So there are certainly some bearish signs here right now. If we look at junk bonds, and let's bring those up. If we look here at junk bonds, which is showing the risk appetite of the market, and high yield bonds, they're both bearish as well. So we've certainly got a lot of bearishness right now, and even when you look at a stock like Apple, not really showing any strength at all. Okay, we've seen the markets rally the last 3 days, and what has Apple done? Virtually nothing. So this is some weakness here, and this is a leader here. This is a stock that has an impact on the market, big heavy weighting within the market, and that's showing some bearishness as well. But remember, we have not the Federal Reserve, the CPI numbers coming out, which the Federal Reserve is going to then act on. So very important that we wait for Tuesday, wait and see what's going to happen. But that's my viewpoints right now. And again, my view was, if we didn't have the CPI numbers coming out, if the US dollar is probably going to pull back to this trend line here, pull back here, that will see the markets and Bitcoin continue to move up. But the Tuesday report, I'm just going to sit on the sidelines. I think that's a really smart move right now. So that's what I would be doing. Fear engage index, we are just hitting in neutral, but that could change very quickly depending on Tuesday's CPI number. We can see here that the number of stocks above the 50-day moving average was 77% last month. Now it's dropped down to 52%. Once it's below 50, that's another bearish sign. So we need to be on the sidelines for the next couple of days, and we can then look for some new positions then. Now, if you were desperate to get into a trade, right, if you had to get into a trade, probably Apple, I would set something up like this. So let me just delete that. So if I could set something up here, let me just put 2 lines here. Give me a second. So if I could set up a trade here on Apple, which right now is looking a little bearish. If I could set something up like this. Now there's a huge amount of open interest at the 150 strike expiring this week, so the 16th of September. If Apple stays between 160 and I've actually got it's actually down here. In fact, what I'll do is I'll actually bring up the trade. Might make it a little bit easier for myself here. There we go. Right, so between 160 and 140. That's where I want it to stay. If it stays there, I'm looking for it to come down to around 150. Huge amount of short interest here. It's actually a pretty significant level there too. You can see it's pivot here, pivot, pivot here, here, here. So it certainly is a significant level. If it does stay within that 160, 140 range, I can make a very nice return, right? So, we could do a trade like this, an Apple butterfly. Again, doing a trade right before the CPI number on Tuesday, not something I would do, right? But just for example purposes, huge amount of open interest, about 150,000 on both the call and the put side open interest here with Apple at 150. So it could pin at that level come the 16th of the 9th, which is the expiry, right? So 292 is what you would pay for that, $292, okay? And you can see here, if it stays between 157 and 8 cents and 142 and 92 cents, just for the next couple of days, we could potentially, with our stop and our profit taker, make 300% return on our money. 300% return on the risks you're taking. Pretty incredible. So that's something you could look to do. But again, for me, looking right now, I would just be patient, wait for the CPI numbers to come out, and then we can just get into another trade next month. Now, we've done pretty well. Like these type of butterfly trades is one of our members who put on a Tesla butterfly that I showed, and within a week made $360 in income on a very small trade, just one butterfly. 817 in, 1195 out, right? Just under $360 US in profit. So it's a pretty good little trade, and they're very, very lucrative. Great risk to reward, always asymmetrical as well, which I love, and they work very, very well. So they're some ideas for this week. A lot of bearishness in the market. A lot of my indicators, market internals, are telling me that the market is bearish. However, we've got a CPI report coming out Tuesday. We need to wait and see. All right, my friends, hope you found that useful. Talk to you again next week. All the best, and bye for now.